What is up, everybody? Welcome back to another day, another episode of Bitcoin and Markets. My name is Ansel Lindner. Merry Christmas. I haven't been live streaming for a few days now, 5 days or so. So, Merry Christmas, Happy New Year. This is going to be the last live stream of the year. Going to come back in early January with 2025 predictions. But we're going to wrap up the year here. Being Monday, it is Fundamentals Report Day. That's my free comprehensive newsletter that goes out every Monday, and we live stream it, go through it. I answer your questions, your comments, whatever you have. I see Dex Invictus is with us. Welcome back, buddy. Okay, I am live streaming on YouTube, Rumble, Twitter, and Telegram. You can reply on Twitter, and I'm not sure exactly how that works, to be honest with you, but it's a much better user experience if you go over to YouTube or Rumble and put your comments there. Okay, so let's jump into the report. Meant to share my screen here. Bitcoin and markets.com. That's where you find all of the stuff. Free email, newsletter, and we'll jump right in here to the Bitcoin Fundamentals Report 320 and snapshot of Bitcoin. Let me zoom in here a little bit. Okay, so weekly trend, we are in consolidation. We'll take a look at the live chart here in a second. Media sentiment, still very positive. Haven't seen any big, some of the MSTR MicroStrategy stuff could be considered negative, but all press is good press for Bitcoin. Network traffic is low. We'll take a look at the mempool and all that. Mining industry is steady. Okay, weekly price at the time of writing, 94,351. That is $1,500 up on the week, almost 2%. Market cap is 1.87 trillion. Satoshis per dollar, 1058. And one finny, my preferred denomination of Bitcoin, is $9.44. Previous difficulty adjustment just happened yesterday. It was 1.1%. The next adjustment is so far away, it's kind of hard to estimate, but it's about 2% right now. Mempool all the way down to 72 megabytes from over 100 last week. So this is a big decline in the mempool, big decline in the amount of traffic. I'd have to go back and see if Christmas week was always like this, but I don't think so. Christmas week tends to be a little bit volatile in the Bitcoin price. And so you would expect that to be a mempool increasing. We didn't have the volatility this year, so mempool is decreasing. Fees for the next block, 40 cents or 3 sats per virtual byte. Super, super cheap. I can't believe we're almost at $100,000 per Bitcoin, and fees for the next block are still only 40 cents. Low priority fee as well, coming in at 40 cents. Lightning Network capacity did increase just slightly by 8 Bitcoins over the last week, Monday to Monday, but channels, over 1% of channels were closed. So we're down now to 45,420 for the number of channels. Okay, that's your snapshot. Let's get into some of the news. Coinbase delists Tether for EU customers. There's a lot of FUD about Tether over the last several days. The story is that Tether is going to be out of compliance with the new MiCA regulations and will be delisted on all exchanges. First off, those claims are unsupported. Tether is not out of compliance and hasn't been told that it is out of compliance. Second, only Coinbase has delisted Tether pairs in Europe. This is very suspicious, being that Coinbase has a major vested interest in Circle, Tether's largest competitor. It's been Circle and Bitcoin enemy Jeremy Allaire likely behind most of the FUD over the years against Tether. So nothing really to these Tether allegations. It's going to be business as usual. I suspect that, Tether is so well financed. They're so well connected. They know if any of these threats are coming, and they know how to mitigate any sort of risks for their customers. It's not going to be like, oh my gosh, January 1st, it's a collapse in the Tether market. No, that's not going to happen. It would be we would hear about it from Tether long before anything like this would happen. And actually, we did hear from Tether. Here's Paulo Ardino. If you look into the X bios of many of the people FUDding Tether, it's easy to understand their play. A poorly coordinated campaign pushed by competitors. Again, so Coinbase and Circle headlined by Jeremy Allaire. This is one of the biggest snakes in the grass in the crypto industry. Um, I would put him up there in probably top 5 villains in Bitcoin, honestly. But anyway, that's just me. Paulo continues, it won't work as it never worked. And then here's another one from Adam Back, speaking the next day, I believe. He said that as far as he knows, Coinbase is the only large EU servicing exchange promoting USDC over US dollar Tether and using quote unquote delisting as FUD. And that's because they have a direct conflict of interest between a co owner of Circle, Follow the Money. So there you go. That is what's going on with Tether. Nothing to be worried about. Next headline. Let me make this bigger for the guys on Telegram. Russia is using Bitcoin in foreign trade. So, directly from Reuters, let me just read from this article. This year, Russia permitted the use of Bitcoin in foreign trade and has taken steps to make it legal to mine cryptocurrencies, including Bitcoin. I mean, what else would you be mining other than Bitcoin? It's so stupid to use this term twice in the same sentence when all you're talking about is Bitcoin. Russia is one of the global leaders in Bitcoin mining. Quote, as part of the experimental regime, it is possible to use Bitcoins, which we had mined here in Russia, in foreign trade transactions, says this guy. He told Russia 24 TV channel. Such transactions are already occurring. We believe they should be expanded and developed further. So we don't know how much is occurring. It's probably just one or two test transactions in a very small, marginal market for some marginal good, perhaps, with Central Asia. I don't think they're using this between China or anything like that. But it's interesting. So it's starting, they say it should be expanded and developed further. I'm confident this will happen next year, he said, adding that international payments in Bitcoin represent the future. Okay, so that is Russia using Bitcoin in foreign trade. I expect this to grow. It makes perfect sense. And especially as people are adding Bitcoin to their foreign reserves, then it even makes more sense. And this is the way it slowly chips away at the system and to becoming a Bitcoin standard. As Bitcoin is added slowly to reserves, it's used more and more in international trade and settlement. And slowly but surely, boom, it's the global reserve asset. And its derivative form, whether that be a dollar of some amount of Bitcoin, say 10 sats per dollar or something like that, whatever derivative form, all these currencies will be competing on a derivative form of the global reserve asset. I've said global reserve money versus currency because currency is a derivative of a money. Currency is a measure of the money itself. So when it was gold, it was 20 point something grains, right, of gold was a dollar. And so, yeah, the global reserve money is going to be Bitcoin. And this shows slowly but surely it's starting to move in that direction. I mean, I guess not slowly, it's happening pretty quick. Okay, next headline, MSTR to vote on issuing 10 billion more shares to buy Bitcoin. Oops, that's a typo. This new plan expands on MicroStrategy's earlier $24 billion plan. At current share price, this would amount to approximately $3 trillion. Of course, phase in over a couple years to avoid harming shareholders. So they're not going to just dump 10 billion shares onto the market. They're going to open it up so they can issue that many in the future, and they can start working towards that and raising money to buy more Bitcoin in a responsible way, in a fiduciarily responsible way. MSTR would then turn around to buy Bitcoin with it. This plan has not been voted on, and I'm not sure when it will be voted on. If you guys have an idea of when this will actually come up for a vote, is it quarterly or what? But this is a big thing. This is gigantic. Potential $3 trillion over the next several years dedicated to coming into Bitcoin. Dedicated. This man is serious. Every week we see more and more hundreds of millions or billions of dollars from this one company coming into Bitcoin. He is dedicated to this, and this shows that he has really big aspirations, adding 10 billion shares. So if you're betting on the future, just bet on Michael Saylor continuing to buy. Okay, next headline. That's it for Bitcoin. A little bit of a slow news week for Bitcoin. Let me check if there's any comments. Inquisitive precursor. You say that Tether is not delisted on Coinbase in the UK either. Just checked on the app. Very interesting. Yes. So it would be just for the EU from Coinbase, but all other servicing exchanges, like Adam Back was saying there, is still using Tether. So it's not really a big deal. And Coinbase will eventually have to bend the knee as well. So they're trying to push Circle. They're in some incestuous love triangle there with Circle. And this is an attempt to FUD Bitcoin. They've tried it over and over again. Okay. This is something that's been going on. Gosh, probably back 2018 or so was when FUD really picked up, maybe 2019. And it's always been like the prevailing thing is, or the rumor is that Tether is insolvent. Now, of course, that's been blown out of the water so many times. They're having to shift that narrative a little bit, just saying that they're non-compliant. Okay, when really, if you look at the letter of the law, which I've seen multiple people do on X, you guys can find those. Tether is just as compliant as anybody else. Maybe, I mean, Circle has jumped through a few more hoops, but Tether is not out of compliance with these laws. But every time it comes back to bite them in the ass. So the attackers, I mean. Okay, let's move on to, well, let me check Telegram, see if there's any comments from Telegram real quick. All right. Macro. So I talked about this last week on last week's report. The Chinese government bond yields, they're not bouncing back. They continue to collapse a little bit over the last week, and they have bounced a tiny, you could say that's a tiny little bounce here, but pretty much they are just falling, and they continue to fall. So the Chinese financial system is providing us a glimpse into what's ahead for the rest of the world. Our bond yields will also collapse. We're not going into some higher for longer reality that people have been talking about for a couple years, maybe. Well, really, they've been talking about it back since the Great Financial Crisis, and I was in that group. Sound money advocate, still a sound money advocate, but a realist now. And we thought the QE was going to destroy the dollar and it was going to collapse and yields were going to bust out and nobody was going to want to hold US government debt. But look, guys, what other debt are you going to hold? You know, yes, you can hold Bitcoin, but it's not feasible to have, 20 trillion, or what's the market for US treasuries? It's almost getting close to 40 trillion. And for other countries altogether, you're talking 100 trillion. It's just not feasible for $100 trillion to just flood into Bitcoin overnight. Okay. So if you're wanting to know if you should hold a UK gilt or a German Bund or US Treasury, you're going to hold US Treasury. Okay. You're going to hold on to that longer than you do those others. And so in a competitive landscape, if we start seeing like Germany's interest rates getting blown out, going to 5, 7, 10%, then you can start saying, okay, they're collapsing in this way. The US is next. But if those things aren't collapsing, the US government bonds aren't going to collapse. But anyway, the thing about falling rates is that in perilous times, in acute financial crises, people rush to safe and liquid assets. And that is dominated by government bonds. I mean, you can put gold in there as well, but gold is, since it's not the actual money, you do have to sell gold to get your hands on dollars to pay debt. So that's one advantage that treasuries have. because they are denominated directly in dollars. But Bitcoin is going to have to scale that hurdle as well. But there are assets that are generally more safe and liquid. And so those things get a bid in acute financial crises. And so the government bond here falling like this to some record lows here for China, it means they're in an acute financial crisis right now. Okay, their 10-year treasury is below 2%. It's 1.7%. Might be even lower right now. So, and that, okay, so if your 10-year treasury is at 1.7%, you're not going to be growing at 5%, their 5% GDP target. That's just a pipe dream. They're going to be growing at 2% max, and probably less. Because remember, the way that China, that not only do they count GDP differently, they count it as inputs versus outputs. So how many holes can you dig and fill back in? We're going to count that in GDP, right? Where Western countries, they count it as gross domestic product. How much did you produce? Spending, okay, the spending in the economy. So that's fundamentally different. But also it speaks to the way that China thinks. All right, just recently, their economy is crashing. And what do? They decide to crank up production. Let's crank up steel. Let's crank up car production. Let's crank up every type of production that we can and try to export it because we need money to jumpstart our economy. Well, what happens? Those goods go out to the rest of the world right when everyone else is having a hard economic time. And it's like dumping goods onto the market, prices drop, wholesale prices drop, and you get a response of protective tariffs from other countries. So you end up digging yourself deeper and deeper. But that's how the communists think. The command economy people think. They think that we're going to ramp it up. That's how we're going to save our economy, and it's not working. So anyway, let's continue reading on here. So they're ahead of the rest of the world as their economy spins its wheels more and more, and its growth picture becomes worse and worse. Their yields are falling. This signals major recession inbound for the whole world. And here is their actual Chinese yuan. It is also crashing. Look at trying to hold on to this 7.3, but we will see when that breaks. All right. Increasing dislocation in the US 10-year yield versus Fed policy. In all my predictions for 2024, this has been the most unexpected, to be honest. The US 10-year yield continues to climb as the Federal Reserve is cutting rates. While a small jump in the US 10-year yield was expected due to increased optimism around rate cuts, the sustainability of this move has been surprising. So to flesh that out a little bit more, when the Fed cuts rates, people think that's easing and they think that's stimulus. And so they will be somewhat optimistic about the future, more optimistic. Because, oh, the Fed has our back. The Fed is cutting, they're easing. It's, the economy is going to improve because the Fed is cutting rates. So there's some optimism, initial optimism built in. And that can last for a month, 2 months, quarter. And then it sinks in, oh, crap. Doesn't matter that the Fed cut rates. We're in really bad shape. Usually, that's right when the unemployment rate starts skyrocketing and it becomes evident that there was nothing to be optimistic about. Okay. And that's when yields turn over and crash. So I've been saying that line for this whole time, that is expected that there would be a bump in the US 10-year yield. However, what's surprising to me is just how far it came. It got help from Trump winning as well, because he's seen as generally pro-business. And also some of the Chinese stimulus, the repeated rumors of bazooka this, bazooka that over there in China, that's going to build optimism as well, similar to how rate cuts build optimism. So that's why this has gone this long. I didn't think it was possible, though, but it has. It has come all the way back up here. We'll take a look at the live chart here in a second. So this is a great chart, this one up here, but it's slightly misleading. If we place it on a chart with a shared axis, it looks like this. So here is the Fed funds upper range. That's the same one that he has here, Fed funds upper bound. And I just put it on the same axis and drew that line at the bottom of the 10-year was the day prior to Fed cutting. And it has been up since. But look at this is an interesting spot that we're at. It has actually crossed, the 10-year has now crossed above the policy range. So that's, you, so many people try to do this because they're showing, oh my God, look at this divergence. What's happening? The Fed has lost control. Da, 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 da. Okay. But when you look at it like this, it's much more reasonable to think about what's going on here. This is definitely something important happened. Something important happened right here when the 10-year went above the Fed policy range. Okay. So I say this is a different story. The Fed was cutting down to the US 10-year yield that was stubbornly inverted from their policy for the longest time in history. So the 10-year underneath this Fed funds is inverted, right? Fed funds overnight versus a 10-year. So you'd expect the 10-year to be higher. And it's inverted for the longest time in history. And now it just peaked out. All right. The question is can the 10-year yield continue higher from this point? The last time this, so the reason why this question now, when you look at this chart, you can ask this question. Okay, so the question is, can the US 10-year yield continue higher from this point? Okay. If all you're looking at is this chart, of course it can. It can keep going. What's wrong? What has changed? Okay. Yeah, they're going to keep cutting in the 10-year. But if you look at it like this, then you say, okay, this has changed. This is something different. Now that question actually is thought-provoking. Can the US 10-year continue higher at this point, now that it's crossed above the Fed funds range? Okay. The last time this happened under Powell is very similar. After 3 cuts, followed by 80 days until breakdown. So this is from 2019. Before COVID, there was a recession already coming before COVID, then COVID exacerbated it. But there was a recession coming. And you can see the 10-year is inverted from the policy range. 3 cuts, 1, 2, 3. The 10-year peaks out above, but cannot continue higher. It can't continue any higher. 80 days go by, 54 trading days, and the bottom falls back out. All right. So this is a very good example, a very similar example to what we're experiencing right now. The Fed cutting into the 10-year, 10-year peaking out, probably going to be unable to go any higher, and then finally turn back over. When does that turn over? Well, when recession is imminent. Okay, so that's it for that one. Let me take a look at comments. Inquisitive says, how long until CCP intervenes in the China collapse? They're already intervening. They're promising refinancing on a lot of things. You can look up the headlines about replacing appliances. So they made it, some of the provincial governments or regional governments said you had to upgrade all your appliances. And so that was to try to boost consumer spending and consumer demand, because their big problem is they cannot boost consumer demand, because the only way you can boost consumer demand is by letting go of the control over the market. And so they're unwilling and unable to do that without collapsing their whole political system over there. And so they have been mandating people spend money. But what happens is people just take money out of one side of their budget and spend it for what they're told to spend it for. And the total amount of spending doesn't increase. So China is having a big time problem trying to stimulate this. They've also gone into banks given cash injections into the banks to say, hey, you need to lend more. But then what happens a lot of times is they lend to each other in some round robin circle jerk of lending between the banks, and it's net neutral, right? But the amount of lending is higher. And so it's kind of crazy. Can you explain the CNY chart as I thought yuan was pegged to the US dollar? Okay, let's do that. Let's go back up to the CNY. CNY here. What I did was I inverted this scale. A lot of times I look at it the other way. So as this line is going down, that's more yuan per dollar, or the yuan dropping versus the dollar. So this way is correct way to think about it in your head. That's why I inverted the axis here. But no, it's not pegged. If we go back in history, it has been pegged in the past. Let me bring up the current thing here. I'll go to a weekly chart, share this tab, and let's zoom out. So you can see we have to go way back here up to the great financial crisis, really pegged, devalued, let it strengthen here actually against the dollar. Then it was pegged again right here up to 2010, let it strengthen. And since then, that's been pretty much the bottom, and it's just slowly ticking back up. There have been a few other attempts to peg it, at least unofficially. I don't think there's been an official peg since like 2010. But right here, back in 2015, you can see this was an unofficial attempt to peg it. So they go out into the currency markets and they try to peg it right here at 6.2. But that pressure to go to actually weaken, because this is not inverted here, to weaken was eventually they gave in, and it really weakened really quickly in that one jump. So that was the last time I think that there's been really an attempt to peg it that I can see. I mean, they're fighting it. One thing that they do is they go into the currency markets and they have, like, we've heard about the gold market and the gold window, and how the bankers, there was like some conspiracy, but it was just the way that they set the opening market price for gold every day. Was these bankers would get on this conference call and they would say, hey, we're going to set the gold price here, this is where I think it should be for today. And they all gave each other a virtual high five, and they went on their way at that, starting the day at that level. So that's kind of what happens in the forex markets. But China would purposely set their limit stronger. So they're trying to signal to the market that they wanted a stronger yuan, and the market would just disregard that for the most part. But that's what they've been trying to do to in some of these cases where it looks like it's like really steadying out. Well, that's because there's some manipulation going on. But the manipulation always fails, just like collusion always fails. Okay, so let's go back to the report. Okay, so that was that. Dex Invictus, going to be a fun year. Yeah, 2025 is going to be very interesting. There's a lot of people, like, of course, Greg Foss and some others now have come out and said 2025 is we've already had the top in 2024. I can't believe that, but we'll talk about that when we get into the price. Okay, so we are down here on Chicago PMI, back down to 36 versus 42 estimated. So this came out just this morning. PMIs, this is the Purchasing Managers Index. There's several of these. Okay, Chicago has one. ISM has one. It's like a private company. The Empire Fed does one as well. So there's multiple PMIs, but this one is a biggie, and 50 on this is neutral. It didn't change. There was no contraction or expansion in the manufacturing economy. Okay. But down at 36, there's major contraction and it's compounding. So a 36 for next month is going to reset to 50. So if we have a 49 next month, which we probably will have way lower than that, but let's say it's 49, that means it's still getting worse, way worse than 36 from the previous month and whatever the month before that was. So this is based off 50 and it's reset every month. So this latest disaster makes 28 out of the last 27 months in contraction. This is why it feels like a recession right now, even if it hasn't been officially a recession. The underlying economy is deteriorating. So, not just China, it's happening everywhere. We've talked about Germany, we've talked about um, all of the different economies that are really, really struggling right now. It's not just China and Germany, it's also the United States. Okay. But the United States is just behind. It's going to last longer than the others at this point, and they're going to enter major, major recession territory, and the US will be close behind them. Okay. But take a look at this chart. So we have the 50 line, and look how bad this is. I mean, other recessions, even if we go back to, I mean, this goes back all the way to 1980 and that 80-81 recession. And we have .com that was a recession. I don't know why they didn't highlight it here, but this was also a recession. Look at every recession is spikes very low, but then it quickly recovers. Okay. But look at now. Now it's just consistently low. Like this is probably the lowest average PMI for the last couple years out of the entire history of PMIs. That's how bad it has been. All right. So that was it for the macro headlines and the Bitcoin headlines. Let's get into the charts. So last week I said on the report that the base case was to hold 90 with a slight edge to the possibility of a recovery to 100. So if we look at this, so to hold 90, which we have done, 90 was this red line that happened to be the top of this surge. And if you do the TD sequential, which is the Tom DeMark indicator for timing in the market, this is also the green 9. So this is the top of the most recent count, happened right here. And so that provides support. And so, yeah, I said my base case was for that to continue with the support with a slight chance of recovery to 100,000. One pattern I've cited a lot recently is the October through November 2023 pattern. And guys, I know I said I wasn't going to talk about this again, probably, but it's coming up again here. However, if we continue with this comparison, that brings us to another interesting alignment. Okay, so this is the one I was talking about for a long time. I just copied this and then put it over today's price action, and it matched up very well. But the reason why I did that was because of this upward consolidation pattern. That happens because there's a lot of dip buying. There's not like the dip buyers are overwhelming any sellers. And so it just results in a pretty much straight line upward in a consolidation pattern. Well, now let's take a look at this right here on the right, this box. We'll take this pattern and we'll pop it onto today. So if we do that, this is what it looks like. Pretty close to what we're seeing with a bottom here today. And then this pattern recovers. It goes on a long ways. And look where it starts crossing the all-time high right around January 17th. The inauguration is January 20th. So it would be crossing an all-time high right at the inauguration and then consolidating and then going on the next leg up. So this is an interesting pattern. I did like that previous pattern better because it was related to a general reason behind what the price was going to do. Namely, a relative shortage of sellers and plethora of dip buyers. The new pattern includes a dip on the orange line after the ETF launch. So here was the ETF launch at the top, and then it sold off. There isn't anything like that replicates that today. Okay. Why this dip would be the same as that dip. So I'm not nearly as attached to this pattern as I was to that previous pattern, but we'll see how this continues if Bitcoin follows a similar pattern. It's also interesting that it's around the same time of year. I think it's 3 or so weeks shifted, but anyway, we'll be watching that. Um, but just looking plainly, the above pattern suggests a bottom soon and a steady climb for the next month through the inauguration. If we follow it closely, we'll hit a new all-time high just days before. This is a fairly rational forecast, as I pointed out, even in last week. So even last week, before had this new pattern, we could argue until after the inauguration that was a run-on sentence for somewhere else. However, if we hold above 90,000, there could be a significant rally on the rumor prior. So, buy the rumor, sell the news. So you buy going into an event and you sell the event itself. So that would be buying going into the inauguration and then selling on the inauguration. Something like that is what I was thinking. So we could see, I said last week we could see a rally, and that does happen to match up with this pattern, which is also interesting. My base case for this week is to hold 90,000. There could be a resurgence of buying in the new year. If any rally comes, it will likely start then, so in the new year. There is some controversy about the FTX distributions. Some are claiming they will start January 3rd, but that seems to be the day the plan is taking effect, and billions of dollars will be distributed up to March. So I'm not sure exactly when that's going to occur, little by little, maybe out to March, but it's not like it's going to happen on January 3rd all at once with $16 billion or whatever entering the market all at once. But that's going to affect price. I mean, even if it's, say, what they do, $1 billion a week or whatever it would come out to, that is significant buying pressure for Bitcoin and altcoins too. But I think that they will be surprised. Altcoiners will be surprised with how much actually goes into Bitcoin and not into their bags. Okay, so that is price. Mining headlines are next. Let me check any comments here. Inquisitive, any views on why we have been dipping recently in Bitcoin? Okay. Yes. I mean, we can go to a live chart. So end of year is just pretty weak right now for Bitcoin. Let me pull up a daily chart. Share that tab. So end of year, we have a lot of these hedge funds that bought into Bitcoin. They're going to be rebalancing as well. So, if they have a set allocation of 2% to Bitcoin and Bitcoin has rallied by 100% this year, they're probably going to have to sell some of that exposure to get back to 2%, or they're going to have to raise their allocation up to 3-4%, whatever the case is. So that rebalancing effect is going to mess with prices. What else? People selling for tax reasons. They're going to harvest gains or losses or whatever, clear their books up before the end of the year. So that is something else that can just have weak demand. Also, people are out of the office. People aren't watching markets nearly as closely as they do all the other times of the year. There is usually like a Santa rally. This year we didn't see anything like that, but there's a lot. There's just less eyeballs on everything towards the end of the year here. So there's some market weakness. If you go back in Bitcoin's history, the second half of December has been historically very bad. It's also been like right after the all-time highs, cycle highs, and then it crashes in the second half of December. So, yeah, the second half of December has been historically not so great for Bitcoin. The first half has been really good, but the second half has not been so great. So all those things combined, it's not crazy to see weakness in the market. I don't think there's any fundamental shifts. There's no gigantic seller all of a sudden out there in the market. If anything, there's more and more people are getting orange pilled every day on the nation state level. I just saw something about Hong Kong talking about buying Bitcoin in a strategic reserve. So, it's every week that goes by, there's more people learning about this, more people succumbing to Bitcoin's incentive structure, and so the fundamentals are not deteriorating. That there's no reason for it to go down on fundamentals. Now, one thing you could say maybe is that it went too far too fast, but not historically. Not if you look at historic Bitcoin cycles. We are just in the very beginning phases from a historical perspective. But you will have periods of consolidation. We went far, and now we're consolidating. That's all that we can say about it. This one lasted a long time. This consolidation, all the way from March to October. I don't think we're going to go that long, but I think we're going to have another week or two at minimum. So that's what I would say to that. Let me check Telegram, see if there's any comments. Nothing. I'm not seeing anything there. All right. Let's go on to the next section. This is going to be the mining sector. And just have one headline here. Again, things are a little bit slowing down into the end of the year. So headlines: Russia bans crypto mining in several regions until 2031. And we just read a story up top where Russia is using Bitcoin in international trade, and now they're banning Bitcoin mining. I mean, this is a big flip-flop. So first they legalized Bitcoin. I don't know, 6 months ago, like officially legalized Bitcoin and Bitcoin mining. Then they announced they're using it in international trade, but then banned Bitcoin mining in several areas of the country. So what is going on here? This is from The Street. You can get the link here in the source. Reading just real quick from there. Russia has banned Bitcoin mining in 10 key regions of the country until 2031, citing its high energy consumption, according to Russian news sources. Dagestan, North Ossetia, and Chechnya are among the regions impacted by the new ban, which will start January 1st, 2025, and stay in effect for the next 6 years. My thoughts on this are okay. It's not that big of a deal. It is a completely different stance, maybe, than the using Bitcoin in foreign exchange. But, Russia has a lot of aging infrastructure because of the Soviet Union, power plants, and things like that. Some of these kind of um, peripheral places, Dagestan, North Ossetia, Chechnya, they're going to have aging infrastructure. Maybe they have problems with um, producing the power for the people right now. And being a semi-free market, semi-closed directed market, they don't have the same possibilities to say, hey, go out there, free market, and build us some new power plants or whatever the case. Also, they have a very bad demographic problem, and they're losing a lot of their best engineers and best scientists and stuff that would be used to build these power plants. They're leaving the country, and they have left the country over the last 10 years. It's not just the Ukraine war. It's going back 10 years prior to that. They saw that Russia's demographics were horrible. They saw that the Russian economy was, it was doing okay, didn't collapse, but it's not, it doesn't have the bright future that uh, maybe the US has, or they might think Western Europe has, but Western Europe is kind of in the same boat as Russia. But so this is kind of understandable from that angle. With the starting conditions that it's a semi-controlled, not very free market, this is understandable. But at the same time, it's also understandable that they would want Bitcoin to be used in trade. So there you go. That's how I square that circle. Next thing up here is hash rate and difficulty. So difficulty adjusted up 1% yesterday to a new all-time high, but has yet to truly spike following the rally up to 100,000. This is solid performance, and I believe hash rate will really start accelerating soon. It's not crazy good performance like the price, but it is solid performance. You can see right over here, barely ticked higher, 1% in the difficulty. Hash rate is bang flat on this moving average, the brighter orange line. The lighter orange line looks like it could be starting to move a little bit higher here, but we will see how that develops. But overall, you know, um, hash rate should follow price, and price spiked to 100,000. I mean, it wasn't that long ago, but it did spike to 100,000, and hash rate has not followed that. So that's what we're kind of waiting for, is hash rate to follow that. But overall, this is a very healthy situation. We're not crashing. Um, Bitcoin miners are profitable. They're out there raising money and buying Bitcoin outright as well. So overall, the Bitcoin mining industry is stable. It's healthy and stable, and we'll see when the hash rate starts to increase as that new price makes buying upgrading equipment or buying new equipment much more doable. But are you going to borrow money to add hash rate, or are you going to borrow money right now to buy Bitcoin? That's what a lot of these miners are dealing with as well. Okay, mempool. The mempool is down big this week from 100 megabytes to 72 megabytes. There is very little risk of a major sell-off in the near term. So that I'm talking about a sell-off in price. Because there is an increased risk, if there was an increased risk, people would be moving coins. So that's my kind of theory there. But you can see this is taking out the least, the cheapest fee segment, and this is looking at everything from 3 sats per virtual byte and above. But you can see this is really cleared out over the last week. And if we add those back in, this is a 2-year look at the mempool, and you can see we are at the lowest level. This has dipped down to about here now, and that's the lowest level. It's lower than this. You have to go all the way back to October of 2023 to have the mempool this low. So we'll see if it can clear out, go back to early 2023 times or not. But if there's going to be volatility in the price, like a big major sell-off, we will see some signs of it in the mempool. There will be signs. Okay. And layer 2, I did not see anything big for layer 2. There hasn't been much going on with layer 2 at all. So, okay, going back up to the top, let me take a look at comments. No new comments. Guys, I'm live streaming on YouTube, Rumble, Twitter, and Telegram. You can join the Telegram, t.me/Bitcoin and Markets. Check that out. We hang out in there all day, posting memes, going back and forth on news items for Bitcoin and macro as well. And I'm not seeing any comments over there either. So, okay, that is going to do it for today, guys. Merry Christmas. Happy New Year. Hope you guys have a great, safe, and fun New Year tomorrow night, because I will not be live streaming before that. So anyways, guys, thanks for hanging out today. Like, comment, subscribe, and I'll see you on the next one. Bye.